Minister, it was reported in the last week or two that I read anyway, it may have been before, that companies set up by Goldman Sachs who had purchased loan portfolios off banks, in this case a crowd called Tremor Funding DAC, an SPV which is just 2 years old and is due to disappear shortly, may generate 153 million in tax-free profits from its backers, but through, quote, complex accounting procedures managed to turn those profits into a loss and paid no tax whatsoever. Are you aware of this, and what do you think about such an extraordinary situation where those kind of profits are not taxed?
Thank you, Deputy. As you're aware, I'm not in a position to comment on the activities of individual taxpayers. I can, however, give the following overview of Section 110 of the Taxes Consolidation Act of 1997 as it relates to the securitisation of mortgages. Securitisation allows banks to raise capital and share risk, and by providing a repackaging and resale market for corporate debt, it lowers the cost of debt financing. It's accepted that having the option for more diversified sources of financing is good for investment and business, and it's also important for financial stability in the economy, as the ability to securitise loan books plays an important role in allowing banks to meet their capital requirement obligations and to continue lending to businesses and individuals. The role of securitisation has been recognised by the European Commission through their work on Capital Markets Union. However, this regime is subject to a number of anti-avoidance provisions. For example, the Finance Act of 2011 restricted the ability of Section 110 companies to take a tax deduction for interest payments to connected persons in respect of profit participating notes. The Act of 2016 brought in place further restrictions, and then the Finance Act of that year was layered on top of the preceding Act of 2011, which I mentioned a moment ago. I am aware that there were competing concerns in this area. On the one hand, ongoing concerns regarding loan book sales and the appropriate levels of taxation, and on the other hand, a recognition that bona fide securitisation is important for both consumer lending and bank capital requirements. My officials, together with officials in revenue, will continue to monitor the sector on an ongoing basis with a view to taking action should it be deemed necessary.
Margaret Hochta.
Minister, the securitisation of loans was what helped crash the entire global economy. Now, you may make a case that back in 2008, crashed the entire global economy. So you'd have to do a fair bit of convincing now to convince me, or indeed most people, that this is not a very hazardous practice. But what is absolutely unacceptable is that these loan portfolios can be purchased by outfits like Goldman Sachs, that they set up DACs, in this case Tremor Funding DAC, and that can generate 153 million in profits, and then somehow turn that into a loss. And of course, this isn't just about that individual company, but this is how a huge number of big corporations, multinational corporations, are essentially paying nothing near the 12.5%. They're paying no tax, or next to no tax, because through accountancy tricks, they write down profits and turn them into losses. And you're allowing it to happen.
Recognition of some of the issues that are being raised there by Deputy Boyd Barrett and others, that important changes were made in finance bills in 2016, in 2017 and then in 2019 to deal with the issues in relation to the taxation of income and the general taxation of these vehicles. I do want to emphasise to the House that in general terms, because I'm not in a position to comment on any individual transaction, the taxation liability occurs on the distribution of the income and the distribution of the income to note holders. That is where the taxable liability occurs, but it is in recognition of the issues that have been raised by deputies in this House that changes have been made in finance bills on this sector in recent years.
Doctor.
Well, I'd only say to the Minister, it's making absolutely zero difference, whatever efforts you claim you're making. It's making zero difference to the capacity of these big financial corporations and other multinational corporations to use networks of subsidiaries in order to generate profits in one subsidiary, and then through distributions or through interest claims that they have to pay interest on loans to other subsidiaries or royalties to turn what is a profit, just like magic, into a loss on the balance sheet, and therefore go to the taxman, the revenue, and say, actually, we didn't make any profits at all. Even though these are being written about, reported about, and indeed celebrated by these companies, boasting how much profits they're making and that these are tax-free profits. I mean, €153 million, 12.5% of that is a lot, and we got zero, and we're allowing it to happen. You, Minister, and your government are allowing it to happen.
Deputy Boyd Barrett, where, and again I'm commenting in general, where the tax is due is when the income is distributed to those who are note holders in these Section 110 organisations. I want to ensure that we have in place tax law in relation to these entities that reflects that securitisation, for example, does play an important role in the functioning of our banks, for example, and ensuring that they're able to fund themselves efficiently, while at the same time dealing with issues that have been raised and have been correctly raised in this House regarding how they are taxed. That's why changes have been made, and where the taxes due, Deputy, generally on these units is not inside them, it's when the income is distributed.